My take is that so far, three things look the same, right? Trump one versus Trump two, the liquidity cycle, now versus 4.5 years ago, and where altcoins are and Bitcoin dominance and all that. It seems to be playing out exactly the same.
This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Bill Barhydt, who's the founder and CEO of Abra. Bill, great to see you. Great to have you back on.
Thanks, Tony. Great to be here.
Bill, you and I have spoken over the years, and I follow you on X, and we often agree on what's happening on the markets, Bitcoin and the macro as well. But we got some breaking news this morning, and that is the SEC and Coinbase have agreed to a dismissal of the case. I would love to get your thoughts since this has some big ripple effects across the industry.
Yeah, look, I mean, it's obviously a case that shouldn't have been brought in the first place. It was part of the SEC's regulation by enforcement, which is kind of being too nice. It was more like shut down the industry by enforcement efforts. Mm-hmm. If you look at the number of kind of orders, settlements, penalties, it's not good. And so very happy that Coinbase came. I mean, look, it's a win. Obviously, in theory, they could bring the case again, but I don't think that's going to happen under this administration. I think we're going to get regulatory clarity, including sandboxes and other things we need to be able to operate. I think they should, if not flat out restitution, they should certainly vacate the existing orders and settlements and return the fines. In my opinion, it's not a material amount of money relative to anything in the U.S. government, but for the startups that had to pay, and the reason that startups paid is mostly coercion, combined with the fact that they couldn't afford to fight. Right. Whereas Coinbase may be the unsung hero here, but they could also afford to fight, right? And I think that not doing that effectively amounts to regulatory capture for Coinbase, because it comes across as they get some kind of blessing and everybody who had to pay doesn't. And, again, while I'm thrilled with this outcome for the industry and kudos to Brian and the team for being willing to see it through, I do hope that they publicly call for everything else that I said to happen, meaning vacating all of the existing orders, settlements, and where necessary, going back to the courts and asking for permission to do that.
Yeah, that's a great point, because we don't want another. I think I saw you tweet about a regulatory capture situation. No. Coinbase gets, the okay, but everybody else is stuck in purgatory.
Yeah, no, but to his credit, Brian it's been a while, but I think I heard maybe a year and a half ago, I heard him talk about this at an event. And I said, okay, well, that's good that you recognize that, often the company that's first gets out ahead and they do end up in the history of telecom and banking with some type of regulatory capture. And we seem to be going down that path here. And that shouldn't happen, especially in an industry that prides itself on enabling people to access what are effectively decentralized systems. Mm-hmm. And so hopefully the government and this new administration in their infinite wisdom will do everything they can to prevent that.
Yeah, I'm hoping that Hester Peirce, leading the crypto task force, obviously Mark Ueda as acting chair, they've been pro-crypto. They've put out sensible guidelines and made sensible comments. hopefully we can see the Kraken case drop, maybe the Ripple case settled, and all those Wells notices and all those things put to bed, against Uniswap, Robinhood, and so forth.
Totally. Yeah, it all needs to end. I think the regulatory sandbox between the SEC, CFTC is coming. I think the stablecoin bill, while not perfect, I think will mostly get fixed in chambers and mostly be a good start. I think the OCC will re-exert itself as it did under Trump 1, and hopefully life will be good. And look, I just want to be allowed to execute. I don't want some lunatic chasing me with a baseball bat telling me what I can and can't do, right? And trying to beat me over the proverbial enforcement head all day. I just want to run my business.
Absolutely. So, on the note of Trump, obviously a huge victory for the crypto industry. You have a pro-crypto president, pro-crypto Congress, SEC chair coming in who's more pro-crypto, excuse me, CFTC chair Brian Contends, pro-crypto, Treasury Secretary, the White House crypto czar. Are you anticipating all of these things are going to lead to stablecoin legislation, market structure legislation passed this year?
Yeah, I think we'll get stablecoin legislation this year, before the August recess. I think anything beyond that will be tough. I think we will get a regulatory sandbox agreement between the SEC and CFTC that doesn't get pushback from anybody else, or at least for now, the majority in Congress. It would be nice to have something encoded by Congress so that there's no regulatory overreach. I think a sandbox is regulatory overreach, to be honest, but it's better than what we had before.
Yeah.
And so in this post Chevron world, the mandate should be, if Congress doesn't say you need to do it, you can't do it. And that's great because, in the United States, it's not like Germany and France. If it's not explicitly disallowed, we are allowed to do it. That's the way our constitutional republic works. And we've forgotten that because we've become so dependent upon the nanny regulatory state the last few years.
Yeah, absolutely. And there's some I should say, different levels to the stablecoin legislation because the United States wants to maintain the U.S. as the world reserve currency. We saw some challenges from BRICS nations, and we're seeing China, as far as holding treasuries is on the decline, but stablecoin issuers is on the incline. So do you think, to your point, the stablecoin is going to make it through because there's geopolitical?
Absolutely. I mean, look, it's Sachs has talked about it, Besant's talked about it, Lutnick's talked about it. It's very obvious that interest rates are a function of supply and demand. Okay, there is a certain amount of debt, that's the supply, and there are a certain amount of buyers for those bonds, both existing bonds and new issuances, and that's the demand. And the more we can increase the demand, the higher the prices of the bonds go, and interest rates move opposite to the prices, which means interest rates would come down. So the more stable coins we have out there that are earning yield via treasuries, the lower their interest rates on treasuries are going to go, which is genuinely very stimulative to the economy, very beneficial to risk on assets, very beneficial to middle class investors, et cetera, et cetera. Not
Now,
to mention debt, right? It lowers the debt burden because you're resetting the debt at a lower interest rate.
absolutely. And then the other thing that's in play is a Bitcoin reserve. Bill, you obviously understand the macro and money and history and all and so forth. Are we at the cusp of another Bretton Woods where we get this Bitcoin reserve pass in the United States, the rest of the world follows? Some other countries are already doing it, but Bitcoin gets stockpiled like gold.
Yeah, it's a good question. The post Bretton Woods thing I think about a lot. I do think that, so first of all, I think they're mutually exclusive concepts. Do we have a strategic reserve or stockpile, as they want to call it, of digital assets and a sovereign wealth fund? Yes, I think that's going to happen during Trump's term, 4-year term. I don't think it's going to happen on the Bitcoin reserve this year. I think there are too many in Congress that have pushback from their home constituents who don't understand this stuff. Okay, and we need a broad-based understanding of why the United States needs this, or somebody needs to step up with the gumption to simply push it through. I don't think that's going to happen this year. So let's break it down a little bit, right?
Mhm.
Strict Bitcoin strategic reserve. I have mixed feelings about it. Okay. It's a decentralized system. I don't necessarily need a government to own it or hold it to prove its worth. Okay. It's validated, of course, if an important government or governments, in the case of both states, US government, now Middle East sovereign wealth funds and others wanting to hold it. But, again, to me, it's ultimately the ultimate check and balance on government policy in the first place. So it's somewhat hypocritical of us to say, oh, the U.S. needs to own this. On the other hand, we do need to get our shit together, right? We're sitting on 30 plus trillion in debt. The debt burden is untenable. And we need to start by stopping the bleeding. In other words, get to a balanced budget so you're not adding to the debt other than having to reset at a higher interest rate, which we're trying hard not to do. And then from there, work backwards, say, okay, how can we reduce the debt burden more and more over time? And then eventually, get to a point where the United States is either debt-free or GDP basically is growing faster than the debt burden, which is where you want to be. And so, I don't think that we have a plan yet that's viable for that, other than to start eliminating waste, grift, and fraud, right? Which has nothing to do with crypto, right? And so, other than FTX, I guess, right? So if we can start with what Doge is doing, which is get to $1.5 trillion within 18, 20 months, that would be an amazing accomplishment for the United States. It would be a complete 180 in terms of my belief that we can get there. And then on top of that, forget about checks to consumers. We don't need 5,000. Even the middle class, nobody in the middle class needs a $5,000 check, right? What we need is a balanced budget, preferably via an amendment, except in time of war. It's not going to happen. So at least, Trump seems to be inclined to do the right thing. Now, as it relates to what our reserve should be and post kind of Bretton Woods era, look, I would love to get back to some kind of commodity-based standard on a global basis. I've talked about this many times. And whether it's oil, gold, Bitcoin, some combination, or just Bitcoin, I'm okay with anything where we can prove reserves, where we're committed to it, where there's, some penalty for not doing the right thing. Right, because historically, we've talked about this before. If you give human beings the opportunity to do the wrong thing for the right reasons, they will.
Yeah,
that's why we've had this kind of, what was the line in the Matrix? We've destroyed the Matrix 25 times, and we're becoming exceedingly good at it.
Yeah.
I mean, that's world orders and imperialism, right? And so, sorry for the diatribe, but that's what I would like to see happen. That's a tough one because you've got a lot of countries right now that are very fearful of the United States in this post, Bretton Woods era in the fourth turning, whereas we had the Western world's goodwill post World War II. But we don't have that right now. And with the divide happening over Ukraine, it's probably getting worse, right?
Yeah, for sure. And what are your thoughts on, Elon's plan to put government spending on the blockchain? I love the idea. I wish voting can go on the blockchain. And obviously in the United States, we could probably get that done faster than other countries, but eventually maybe across the world, a world running on chain, economies, voting, all these things, markets as well. It could help prevent a 2008 type financial crisis, grifting and the spending and abuse of power by some of these government players.
I think it's great. I'm okay with it. I don't think it's necessarily the reason why it's going to succeed. We have this issue now in the West with what is truth, right? Everybody's community notes seem to be different, which is problematic. But look, I mean, a great place to start is raw data, not opinions, not interpretations, but just raw data. Like, here, this much was being spent here. Now, we can debate all day long whether that's fraud, grift, waste, or justified, but at least we know. Yes. Right now, nobody has a handle on where our money and debt, tax dollars and debt burden is going. No one. Not the government, not the GAO, Pentagon can't pass an audit. So yeah, I mean, putting it all out there and letting the public sift through it is probably a great place to start and should have happened pre-blockchain. But now with blockchain, in theory, your excuses are diminishing quickly.
Absolutely. I can't wait for that. I think having that transparency and people being or government being more accountable, it's going to be great. And maybe it's these things happen over generations, and this is I like to call it like the fourth industrial revolution with all these technologies, and we're headed maybe to a better world, Bill. I don't know. There's certainly some draconian or scary parts of it, but maybe more transparency because of the internet, blockchain, and so forth.
Yeah, I think decentralizing things that should transcend someone's opinion or should represent just basic truth is a great idea in general. It's very expensive. It's hard, as you know, getting these scalability issues, which we've had over time. It's different for raw data versus transaction processing. They're not the same. It should be very easy for raw data because you don't really care about scalability so much.
Hmm. Now, I want to get your thoughts on the macro and the Fed interest rates and possibly QE on the horizon. Right now, folks are a bit dismayed. Bitcoin's not doing anything. We're getting fake outs up and down, consolidation. Altcoins are bleeding. ETH is struggling. People are starting to lose faith. But the charts are still looking good overall for Bitcoin. But a big part of what drives asset prices is global liquidity. We're starting to see an uptick. What are your thoughts on where the Fed is at, what interest rates they may do with interest rates, and QE when that may return?
Okay, so there's a lot of moving parts here. But the first thing I'll say is we've seen this dance before. We've been to this dance before. Every single cycle that's involved other coins besides Bitcoin, we've been having the same discussion. The sky's falling. It looks terrible. It's going to be just Bitcoin going forward. And it's never turned, so far at least, it has not turned out to be true. And everybody's like, oh, but now we have tens of thousands or hundreds of thousands or millions of meme coins. Well, before we had hundreds of thousands of NFTs.
Yeah.
And those other assets tend to be a liquidity suck for the positive price appreciation on the major assets, Bitcoin and Ethereum in particular, when it came to NFTs, and Solana in particular, when it comes to meme coins. And it kind of creates a circular, as you know, Trump caused a lot of new money to come in, which caused a lot of Solana buying. And so you had this kind of like circular effect of one driving the other very, very quickly, which again, it's a microcosm of what we've seen with NFTs and meme coins last year. So my take is that so far, three things look the same, right? Trump 1 versus Trump 2, the liquidity cycle, now versus 4.5 years ago, and where altcoins are and Bitcoin dominance and all that, it seems to be playing out exactly the same. So, is it going to look exactly the same 6-7 months from now? I don't know, but I see no reason to think that things aren't exactly the same right now as they were. Very similar, at least let me just say very similar as they were 5 years ago, which leads me to believe that the major L1s are about to have another leg up after a very reasonable consolidation. And remember, in the crypto world, in equities, 5% band for tech stocks is a consolidation, or 10% band. In crypto, a 40% band, a 50% band is a consolidation. And you say that to TradFi folks, and they're like, you're nuts. I mean, that's crazy, right? You've just literally lost half your net worth. Well, have you really? I mean, it's an exponentially growing asset class whose adoption has never seen the likes. And so, again, it's consistently done this over time. And as I say to people, if you can't hack that, then just lower your exposure to the space so that you can sleep better.
And with regards to fiscal decisions from the Fed and so forth, to your point, it looks very similar to what we've seen historically. What do you think might be the catalyst for them to start the money printer again? And is it some sort of major collapse that may trigger it?
Yeah, I think that a lot of government employees are going to be losing their jobs. Now, long term, that's structurally very beneficial because government expenditures basically require more than $1 of expense to generate $1 of GDP growth, whereas private industry requires less than $1 expense to generate $1 of GDP growth. And it's kind of common sense if you think it through. But in the short term, you're letting go of a lot of employees. I mean, look what's happened to the housing market crash in in DC. We've never seen anything like that, to my knowledge. Maybe in the 20s before you and I were around, or maybe in countrywide and in many pockets during 2007, 8. But the housing market really crashed hard in the last 3 to 4 weeks. And I personally have never seen anything like that. So,
Mm.
who knows what this is ultimately going to mean for the Fed? But I do think that they're going to have to do something to get rates down. The biggest psychological kind of factor for consumer sentiment in the United States is home prices,
Hmm.
right? The value of your home, and secondarily stock prices, because more people own homes, I believe, than own stock. So if we can get treasury rates down, which will have an impact on mortgages, or provide more liquidity to banks, and the more liquidity that banks have, the more they're lending, the more competition, again, supply and demand, interest rates will come down. That will start to create the perception of liquidity, and also, I think, smooth out the initial shock of all of these federal workers who are going to be hitting the the public marketplace. Now, not all of these people are in DC. An outsized percentage are, but remember, they're not going into the office anymore. And
Right.
so, in theory, we don't even know where they all are.
Mm.
Right? We can see the number of houses coming on the market in DC, but my guess is that federal workers who were working remotely in other parts of the country aren't selling their houses, or at least not to the same degree yet, at least, because they can probably afford to keep them, because their houses aren't as expensive. The payments aren't as high as DC, which has always been ridiculously high.
Mm.
And so, the bottom line to all of this diatribe is I do think the Fed is going to have to do something to do this. And Trump, more importantly, has said, we will do what it takes to get interest rates down. Bessent was talking, I think it was yesterday, I don't know if it was Bessent or Lutnick, maybe it was both. Bessent wants to basically do a deal with certain bondholders to convert them to long-term bonds. Now,
Mm.
what the carrot versus stick are to accomplish that, I don't know. I think Trump was right 5 years ago when he said, or 6 years ago, whenever it was, that we should have been doing 100-year bonds at 0% interest rates. Obviously, if you can, borrow at 0%, which means you're not paying anything back,
Yeah.
and you can do it for 100 years, that effectively means forever, right? So he sounded nutty at the time. Turned out he was 100% right. Um, so I don't know what their incentive is, but he's very clear. All right, they've said this since before they took office. Interest rates are and need to and are going to come down, and that he's not saying that the Fed needs to do that, right? Because traditionally, the Fed lowering rates does lead to a drop in treasury rates. This time, it didn't happen, and
Mm.
I think the reason is not about inflation, maybe a little bit, but I think it's mostly due to the fact that buyers of debt are afraid that the United States is going to be trying to flood the market with new debt as it retries to refinance, and the demand for that debt is going down given the geopolitical changes we're seeing. As you said, China dumping the debt, Japan basically trying to do a reset. They tried to stop, and we saw what happened in the JGB and currency markets last summer when they tried that. So
Yeah.
so, the Fed's got to do something. I mean, sorry, Treasury is going to try to do something. I think by this summer, the shock of the government cuts is going to lead the Fed to do something as well.
Mm. I know markets are forward looking. Do you think that seasonality wise, March and April are usually really great for the stock market and crypto, then selling may go away? Could we be in this consolidation zone for a while? Or the market's forward looking, saying we see what the Fed's going to do, we see what's on the horizon, business as usual?
That's a great question. I don't see us being in this consolidation for more than another month. I mean, I could be completely wrong on that, but I'd be shocked. Just with the number of institutional Bitcoin buyers, new money coming in. I think there's a growing acceptance in retail for Bitcoin. And again, the gains tend to partially find their way into other things.
Mm.
Ethereum looks like a beach ball being held down right now. It looks like it's been in this long-term consolidation and is ready to just explode to like 8K quickly. That's my take, but again, could be wrong. But is it a month? Is it 2 months? Is it 3 months? I don't really care that much. It just structurally looks like something we've seen and seen play out multiple times. And I don't think this time is going to be any different.
Yeah, for sure. And speaking of ETH, obviously we have an Ethereum spot ETF now. Bitcoin obviously has been stealing the show, breaking records, ETF records, right? Inflows have been crazy, and you see who's buying sovereign wealth funds and all of Wall Street. But do you think when staking, which is a big topic happening with the SEC right now, they add that to the ETF, it's going to
Yeah.
bring a lot of inflows?
I do. I think a lot of international buyers like the yield on Ethereum. Again, I have mixed feelings about securitizing crypto. I don't really care what people do. I mean, they should be allowed to do whatever they want. If you want to buy Bitcoin and Ethereum as a security, go ahead and do it. I don't recommend it, but it's fine, right? So yes, I think that we should have had in-kind deposits and redemptions for ETFs from the beginning, and we should have had a staking from the beginning, but it's going to come, and you can just basically look at what BlackRock says they want to have happen, and that's a pretty good yardstick for what's going to happen, since they're the largest asset manager in the United States and have outsized influence. And I think now by proxy, Lutnick is the same. Like while he's much smaller, obviously, than at Cantor than BlackRock, given his position vis-a-vis the administration, he's going to get what he wants as well.
Yeah. Speaking of Cantor Fitzgerald, right? I'm sure they're going to get what they want. Now, there's talks of other altcoin ETFs like Solana, XRP, HBAR, Litecoin, and so forth. Given, the SEC just dropped this Coinbase case, some of those coins were mentioned in those respective lawsuits, that we may see these altcoin ETFs get approved as well.
Yeah, I think it's inevitable. I don't see why any any asset. Look, the thing that never made sense is a security, is it a commodity? That makes no sense. If you're trying to securitize something, whether it's a commodity or a security, okay, I guess you could posit that there's some company that should be making disclosures if it is a security. Um, the litmus test has always been, is there an off switch? But these things are by and large commodities, and everybody accepts that they are, regardless of how they may have raised money in the past. Okay, that's already that's now by definition the past. So yeah, I think the floodgates are going to open now this year to every top 20 crypto asset having an ETF equivalent
Mm.
in the US, and then ETPs out to the US, Europe, Hong Kong, whatever.
Right. So Bill, this is something I've thought about, and it sounds a bit conspiratorial, but like on one hand, I like that BlackRock's here and Wall Street and all these big banks, but on the other hand, I'm like, is this some sort of Trojan horse where the billions of people are going to go to these institutions in that ETF wrapper? They own some crypto, but they don't actually own it. They can't trade it 24/7. It's closed on weekends, and there's no self custody, right, to be your own bank.
Yeah, I look, I completely agree with that sentiment. I don't think that for anything other than 401ks and IRAs in the US, that the ETFs are a great idea for a lot of reasons, which I've talked about many times. As a libertarian, my take is you should be able to do what you want. If you want to send your Bitcoin to Dev Null and erase it from the future ownership potential of Bitcoin, then go ahead. If you want to own Bitcoin via an ETF, go ahead. If you want to buy it and put it on a ledger and bury it in your backyard, go ahead. Now, if you ask me what you should do, in my humble opinion, right, you should either be self-custodying crypto yourself, or if you don't understand what I just said, but you get the ethos of this, then you can work with a company like Abra, who has, the ability for you to retain title to your assets.
Mm.
I think that's the most important distinction when it comes to, securitization of these things versus self-custody versus third-party custody, is, do I retain title to the asset? With the ETFs, I believe you do. It's not in a named account, but the individual security, basically has a guarantor, right, of the custody. How they do deal with hacks and whatnot, I'm not clear. I'm not in the securities world of that. But you know, this new MPC technology, like what we employ, does allow you physically to retain title to the asset, both physically and legally. Unlike the exchange model, where you're effectively lending your crypto to Coinbase, or you're lending your crypto to Bybit, who had a hack today, or you're lending, you know, your crypto to Gemini. And look, these are all good companies, and it's fine. But people don't understand the difference, which really bothers me. But if you ask my opinion, you should be looking for services that allow you to retain title. And by the way, that means, what does retain title mean? It means that if the underlying company goes away, your assets are still your assets, and you don't have to fight with a bankruptcy court for years to get your assets back.
And you mentioned Abra offers that service, right? The title service.
Yeah, exactly. So we're a registered investment advisor with the SEC. And in English, what that means is that when you do a deposit into your separately managed account, you get your own vault. Your assets stay your assets. Even if you borrow against your Bitcoin, right, you retain title to the collateral. Now, you don't get the collateral back until you pay the loan back, but it's still your collateral. And if Abra was to go away, it's still your collateral. It's still your Bitcoin deposits, or your ETH, or your Solana deposits, et cetera, et cetera. And that's the way this should work.
Mm. Yeah, absolutely. I love that. And that's such a great option. I think more people need to learn about, services like yours, because they only see, oh, I could put it with a centralized exchange, or I can self-custody. And some are intimidated by the self-custody aspect with the 24 seed phrase and so forth. And look, there is an education gap, but your services like yours, which is in a middle ground, makes it easy, and you can have peace of mind. I want to ask you about meme coins, because we touched a bit about it earlier. This thing is getting out of hand with the pump fun and the ability to create any kind of bullshit meme coin, and then people are getting broad. Javier Malay, I think he got coerced into doing this. I don't think he knew what he was doing, and then you got celebrities getting involved. How do you think this thing gets regulated?
Well, gets regulated. I'm not sure I agree with the premise of the question. I think that the first thing we need to do is recognize that we have financial fraud laws throughout the world that deal with consumer financial fraud. You know, whether it's U.S., China, Europe, right? The criminality of fraud is pretty well, you know, um, clear, pretty much clear.
Hmm.
And so I think there was an announcement that the SEC is going to be focusing more on fraud versus like traditional, what we've called traditional regulation by enforcement, let's say, right? And that makes sense to me. All right. Meme coins in general, to me, are a free speech versus commodities versus securities issue, right? Because they're generally software that people have put a price tag on. So in other words, if I draw a picture and I make 100 prints of that picture and I sell those prints, or I sell 50% of those prints, keep the rest, the price of the prints goes up, and then I sell more. That's not a security offering by any, definition I've seen. And it's certainly, I haven't basically created new commodities by any definition I've seen. So it's literally just pieces of paper, right? So meme coins are that. But now I could create a fraudulent scenario for selling those pieces of paper for those prints.
Mhm.
But if I'm just, creating a market for them, um, there's nothing illegal about that per se, and it doesn't require new regulation, in my humble opinion. I've seen many people say, "Oh, ban it." That's a slippery slope to me, because now
Sure.
as a libertarian, you're getting into free speech
Right.
and individual liberty and rights issues. Now, that having been said, we've got politicians that are getting into this, well-known celebrities, and my advice to them is stop. Okay. There is no upside to Trump, Milei. Well, Kanye is a nut. I don't know how his brain works, but there's no upside, especially to well-known politicians who already have an audience, to launching and selling these meme coins. It smells and looks like grift, everybody. And it turns out that the people who were doing it were not the politicians themselves, but by certain people who were able to influence them,
Yeah.
who in many cases it does look like they were executing some kind of grift, which makes them look bad. Now, Milei's in hot water. I don't think it's as bad as the crypto community is saying, because I don't think the rest of the world is paying as much attention as we are. Meaning like, oh, he's going to get impeached for all this. I'm like, I don't think the rest of Argentina is that concerned about a meme coin. Right. I think they're paying more attention to him giving a chainsaw to Elon.
Yeah.
And so that's good for us. But still, stop. If you're a politician, if you have a large social media following, don't do it. You don't need it. Right. There's no upside. It's all downside. If I create a meme coin, no one cares. That's fine. Genuinely, no one cares. That's the definition. It's organic growth. If a celebrity do it, it's not really a meme coin. It's by definition a Trump coin, which I wouldn't say it's a meme coin, right? So this whole thing like that Elon said, I am become meme. That can't be true by definition, because he was already an organic meme that grew from whatever. And so anyway, stop doing it. Stop it. It doesn't need new regulation. Just stop.
Yeah, and I want to make sure I add context from my perspective.
Yeah.
I don't believe in banning meme coins. Like it's like going to Vegas. You want to gamble your money? Fine.
100%.
You want to play the lottery? Fine. What I guess my question is, how do they stop those rug pulls, right? Because the mechanism to do it is like that and that.
Put them in jail.
Yeah.
Yeah. Put them in jail. So create a task force within the U.S. regulators and international regulators, include China, include Western Europe, that says if there is financial fraud on public blockchains, we have the ability to come after them, even if the fraud happened in my country and the fraudster is in this country, right? That's where they should cooperate, right? Because we're not creating new laws at that point. We're just basically creating a message that if you commit fraud against other people by basically saying, I'm selling you X, but you're not, you're actually just stealing their money, then you deserve to go to jail.
Yeah.
Right. And that transcends meme coins. That's true for the paper prints that I was describing before.
I want to get your thoughts on the repeal of SOB 121 and what we may see the banks do next. Because, Bill, the shackles are off. They can launch custody services. They can launch their own ETFs, their own stable coins. Do you think they're going to take market share from exchanges like Coinbase and things like that?
No, not in the short term. I think a lot of them will partner with the likes of exchanges or Abras and other custody companies. I think that they're still waiting for clarity from the FDIC in some cases, or the OCC, depending upon who their regulators are, state versus federal, et cetera, et cetera. But to your question, the premise of your question is, yes, I do believe the floodgates are open. I think it's going to take 6, 12, 18 months for this to kind of really get momentum now. But I think all the banks are going to have to look at this hard. And I think that it's going to be a boom for third-party service providers, enabling this for banks who don't have the wherewithal to do it themselves. But, the FDIC and the OCC have very clear risk guidelines for banks. And this transcends crypto, meaning any bank or FI that works with a third-party technology provider has to go through very careful risk assessments for working with that technology provider. And crypto obviously will not only be no different in that regard, but still get more scrutiny. It will just be scrutiny under the guise of, hey, you can do this, but you got to follow the existing guidelines for technology risk assessment. Those guidelines were mostly always reasonable. And if we had applied those from the beginning, the banks would already be in the crypto space.
For sure. I want to wrap it up with what's new with Abra. Are you guys planning to launch your own stable coin or do anything like that?
Yeah, I can't comment on future products, except to say, we're a very large user of most of these liquid DeFi protocols on Ethereum, growing on Solana. We're a big believer in yield-bearing stablecoins right now. The benefit is mostly going to Tether, which makes no sense to me. I mean, good for Tether, doesn't really make sense for the users. And so, we're actively working in the background to change that. we'll have more to say on how we plan to do help in that regard in the coming months. But yeah, so our services run the gamut of just straight up custody to yield products, the ability to earn yield on Bitcoin, dollar deposits, other proof of stake assets, to borrowing against Bitcoin holdings, especially Bitcoin and secondarily Ethereum and Solana. The Bitcoin-based loans business for us has definitely been booming. And again, our advantages there are: one, you retain title to the collateral. Two, we can lend in very large amounts. I think we're the only lender I'm aware of that's able to do, large 7, 8, even 9-figure loans against the underlying Bitcoin collateral. We can do that in the, 30 to 50% LTV range or lower if somebody wants a lower risk proposition. And the rates have been very reasonable, right? I think we're in the 7% range today. It's variable, but pretty good deal. So I feel like we're in a very unique situation on the consumer side, and then we have our prime brokerage business, which has been servicing the likes of miners and hedge funds, ATM networks, like that for years, and continues to grow and our options business now as well, derivatives business, continues to grow and do well for us. So look, I think the regulatory headwinds and other business headwinds that we had before have completely turned into tailwinds for us, which is what we've asked for all along. Right? We want to execute. We want to compete on a level playing field, unencumbered by the lunatics chasing us with the proverbial baseball bats. And so we have that now. And, I'm grateful for that to the new administration. And I look forward to, competing on a level playing field to execute.
Yeah, absolutely. Bill, great stuff. Always great insights and information. Thank you so much for joining me.
Yeah, great to see you, Tony. Thanks for all you do for the space.